If you've read our book, you know that we quote Pearson's Law, which says, that which is measured improves. That which is measured and reported improves exponentially. What does that mean? That means that you need to use your trade worksheets, your weekly market worksheets, and your daily market worksheets. In particular, the trade worksheet as you move forward and practice trade with us. Why? Because by measuring and reporting what it is you're doing, you're going to find that you will improve exponentially in your training. If you want to supercharge your training, of course, you need to spend 10 minutes with us every day going over these charts, understanding what we're talking about, and noting down the lessons that you learn. I said yesterday, for those of you who are just starting out with us, and even those who've been with us a long time, it doesn't hurt to go back to the website and once a day or twice a week, set up a time for you to listen to the trainings and go through each of them. Take notes, note down what is important. Understanding things like the price percent oscillator, like the derivative oscillator, like the exponential and moving averages, the Bollinger Bands, the things that we talk about, making sure you understand how the Heiken Ashi candlesticks work. All of those things, having that knowledge will just add to and accelerate your gaining of expertise in how to read stock charts. And as I keep saying to everybody, if you can follow these charts, if you can follow a trend, the world is your oyster. When you're able to look at these things, I mean, just look, after the weekly vertical crossover occurred, that next week sometime you found a jumping in point, okay, anywhere along that continuum. We have gone up anywhere between $9 and $20, okay, since then. Now, that is beautiful in anybody's book. And seeing these weekly trends on the charts we use are easy once you practice and you get to know them and you understand why we do what we do. But you'll never understand that if you don't practice it. You have to practice it. You have to measure it and you have to report it, and you will improve exponentially. Let's jump into these charts. We see on the S&P 500, pullback continuing, down 0.79% for the day. We have a red spinning top at this point. With the pullbacks, we can see the derivative oscillator losing energy, price percent oscillator, not quite flat on the weekly chart, but losing lots of energy. Just continuing to watch. We're not calling anything down yet, but we are paying close attention. We look at the 2-day chart. What do we see? It hasn't crossed over yet, but it's awfully darn close to it. If that occurs, of course, that means that our hopes of a bounce back occurring typically immediately is not going to happen. Maybe the market's topped out finally. Don't know. We'll continue to watch, follow these trends, and pay attention to what it is the market is telling us. Remember, we don't tell the market what to do. It tells us what it's doing. We follow that trend. We see the derivative oscillator losing energy, price percent oscillator getting very close to crossing over. We look at the 4-hour chart, and again, 2 days of growing stronger down movement, derivative oscillator accelerating down, price percent oscillator hammering down, pushing through the weekly trend line throughout the course of the day on Thursday. That's where we are on the S&P 500. We go from the S&P 500, again, down 0.79%, to the Qs, the NASDAQ 100 down 1.22%. That's a hammer down day, folks. The derivative oscillator losing momentum for the week. Price percent oscillator also hockey sticking over, not going up at that same rapid pace that it had. We have we don't have a doji. We do have a bit of a spinning top. Wouldn't call that a hammer. So again, a bigger wick on top, smaller wick on the bottom, trying to push through the weekly trend line. Not really doing that just yet as far as the weekly chart goes. Well, as we go through things, you'll see a little more. We see that, again, the Qs getting close to crossing over, going down. We can see that for the first day of this latest 2-day candle, pushing through the weekly trend line. Now we'll wait and see when this candle is finally drawn on Friday what's really happening. Can't call a crossover yet until that candle is fully drawn. Same with the S&P 500, as we said earlier. Derivative oscillator losing momentum, price percent oscillator moving down. And we see on the 4-hour chart, again, more accelerating down moves over the last 2 days. Each candle seems to be getting bigger, moving further down. Derivative oscillator gaining downward momentum, price percent oscillator spiking down, pushing through the weekly trend line at the end of the day. So again, markets are falling off quite significantly. We'll see how long that goes. We don't have a weekly vertical crossover, so of course we're not calling any change yet as far as looking to jump into a down move. We have to wait for the market to sort itself out. You get greedy, you get screwed. You have to wait. And what do they say? Pigs get slaughtered. So you want to be careful. Don't get greedy. Don't over-anticipate. Let the market sort itself out. And once we have an established trend on the weekly and the 2-day, that's when we look to jump in. Remember, we have rules for reasons because they work almost all the time. What keeps things exciting is they don't work all the time. Anybody who tells you they do is a liar. They are not telling you the truth. The rules don't work all the time. They work most of the time. That's why we use them. And we also try to tell you the truth here. We don't sugarcoat things. If you're not willing to work for it, you're not going to get it. Those of you who played sports throughout your life like I have, you know it takes work, it takes dedication, it takes discipline, and sometimes it takes a little pain. We try to minimize that through practice. You don't just jump into the Super Bowl without going through a whole lot of practice. That's what we're doing. Well, and it's fun. It is fun. It is so incredible to make successful practice trades. And once you make them again and again and again and again and again, and you get good at this, then and only then can you consider what to do with your money. We're not a stock calling service. We're an education firm. We see bonds on the weekly chart up 0.65% for the day, the only thing up for the day. We have a green, now again, this is the weekly chart after a down week previously ending the 1st of March, this last Friday. So far, we have a green up candle, got a long wick on the bottom representing down pressure, little wick on the top. It is green, and of course, what's happened? We looked like at the beginning of the week we were going to have a crossover going down. If Friday's not a big down day, not going to have that weekly vertical crossover on bonds. Derivative oscillator is negative, but that's not the price percent oscillator, is it? Price percent oscillator is our big cheese, our main indicator. So that's where we are on the weekly chart. We go to the 2-day, and of course we can see the price percent oscillators flat, derivative oscillators losing downward momentum. And of course, first day of this latest 2-day candle, green open box candle. You know, again, typically means strong move going up, and it is trying to do that, push through the 2-day down trend line. Don't have a crossover yet, but again, some significant up movement as far as the Heikin-Ashi candlestick goes. We look at that 4-hour chart. It crossed over back on the morning of Wednesday the 6th, and we've got 5 up candles representing 2.5 days of up movement. We'll just see how things sort out. We do not have a trade at this time. 2 days down, weekly is up, waiting to see how bonds are going to sort out. So we go from the weekly back to the weekly, from TLT, 20-year bonds, to GLD, gold. And are we going to get a weekly vertical crossover on gold by the end of the week? Don't know that that's actually going to occur. Have to have a big down day. Not much of a down day today, 0.08%. But if you have a big down day on Friday, might have that weekly vertical crossover. I'm not thinking it's going to happen, but I'm happy to have it happen, because what does that mean? It means we'll be looked to shorting gold the following week. If that doesn't happen, we may be a week away from doing that, or maybe not at all. Maybe gold will rebound, and I'll show you why I'm saying that when we get to the end. We get to the 4-hour chart. So price percent oscillator losing lots of momentum, derivative oscillator losing lots of momentum. No crossovers yet. We go from the weekly to the first day of the latest 2-day, and that's where you start seeing sort of this bottoming here, right? You see things bottoming somewhere around 121.19. Now, something along there, the 121.50, 121.19 mark. See the wick on the candle ending Monday the 4th. You see the wick on the candle ending Wednesday the 6th. And the first day of this latest 2-day candle, you see everything there around the 121 something mark. Price percent oscillator gaining downward momentum, derivative oscillator heading down on that 2-day chart. Now, watch what you see on the 4-hour. Look at that. We see things again, 121.30, 121.40, something along there, just sliding along. What's happening? Price percent oscillators barely moving up, derivative oscillator losing downward momentum. Is gold bottoming or just searching for a bottom? Has it found a support level? Don't know that it has. Perhaps we'll continue to watch and see. As we go back and look for support, we can find actually some support on that 4-hour chart around the 121 mark all the way back to where it had bottomed out previously in January. And we'd have to go way back. Well, it's trying to find a bottom there and then drop further off all the way back in June of 2018. So again, just watching might bounce off of that. That's what it did before. So we'll see. We're not going to call anything, just looking for some support to see if that's where things might end. We'll wait and see how things sort themselves out, because that's the beauty of what we do, my friends. We don't make decisions because of what we think. We make decisions because of what happens with the trends. Remember, the big trend's the weekly. The intermediate trend is the 2-day. When they're moving in one direction, and we can find entry points on that 4-hour chart or a weekly vertical crossover, that's when we jump in and we ride the pony. Some of you make fun of me saying that. I don't care. That's what we do. We get on that golden pony and we ride it either up or down. Now, when I say down, new people are like, what is that guy talking about? Why would you buy something that's going down in value? It's because you don't buy what's going down in value. You buy the inverse, such as SH. When you see the SPY, when it's going down, do you know what the inverse fund? There's several of them. One ProShares, which is the one-time short, it just goes in the opposite direction. They have this set up so that for every percentage point that the S&P goes down, SH tries to match it going up in the opposite direction. Again, little level of sophistication there for you to practice, because what I want us to do, folks, is at some point we all know what goes up must come down. And when these markets crash, the stock market crashes, when gold rolls over and goes down hard, we want to be there to get our trades out of gold and either let gold go down and buy it back cheap again, or get into an inverse trade. Same with stocks, same with bonds. That's what we're all about, being sophisticated, being able to find trades or investments, whether the market's up or down. That's how simple it is, because all our decision is what? Either to buy or not to buy, to sell or not to sell, to buy or to sell. Stocks can either go up or they can go down. Yes, they can go sideways too, and we see that in the summertime. But I'm telling you, follow us every day. Work on this stuff. You can do it. There's no hype here. There is simply work and achievement. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Buy our book. We're sending out lots of them today in the 8th printing. You want to know what we really do here, and if you really appreciate what we do, become a Patreon supporter. We had a great monthly Q&A yesterday with our members, along with a great review of the stocks and ETFs they were interested in earlier in the week. All the best.